You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of InkResearch.ca, Canada's first online financial news and research service. Welcome to the show, Ted.
Oh, it's great to be back, Jim.
Before we went on air, we were talking about the impact of the low Canadian dollar. I know it's not good for morale if you're thinking about cross-border shopping, and it's even affecting the gasoline prices that we pay because we have to buy our own Canadian oil in American dollars. So, low Loonie, is it just a matter or a state of mind, or is it something we should really be worried about?
Well, I think it's something we should be worried about for two reasons. One is it's the purchasing power of every Canadian that's at stake. And while a low Loonie will benefit some people who are exporting into a very sort of price-sensitive market in general, for most of us, it affects a lot of the things we need to buy: fruits, vegetables, gasoline, if you drive a car. So many imports, that we use are going to continue to become more expensive under a lower Loonie. And it's not just going to the supermarket. If you're running an organization that looks and sources from around the world to build and add value in Canada, you're also getting hurt. So just because the Loonie is going down doesn't necessarily mean all exporters are going to win. Yes, some exporters will win, especially commodity exporters. They will benefit to some extent. But then that gets back to the problem we keep hearing all the time about, well, Canada's too dependent on exports. Well, at some point, we have to tackle the issue about productivity, get serious about it, and not look to a low Loonie as a crutch and a quick fix to every time there's a downturn in the economy. I think we're a ways away from that. It's so much easier for politicians to just let the Loonie fall and to hope that spurs a little bit of growth. And if that doesn't work, they can get a central banker who will try and talk the Loonie down even further. And that's one way we've seemed to have drifted as a country, and hopefully, though, we've learned that that's no panacea. We're still losing market share in the auto sector to Mexico because Mexico has seen its peso devalue even faster than the Canadian dollar recently. So there's always someone willing to eat your lunch at that game, and in the meantime, everybody gets poorer. So let's hopefully wake up here in terms of what we're doing on the policy side and get our heads around some strategies that will create wealth over the long term. So, that's a bit of a wish list heading in. It is Christmas though, so why not? That's my economic letter to Santa. Let's deal with the productivity issue because falling dollar is not good news for Canada. It's generally a very bad news.
Is there anything the federal government could boost the Loonie, or is it something that we should just let the market decide?
Well, we have to let the market decide, and I wish the central bank, I wish the Bank of Canada had let the market decide. It could have probably avoided the recession that we're in. When Stephen Poloz took over in June of 2013, one of his first things he did was, take the boots to the Loonie through a central bank speak, and this was a big policy mistake because oil was trading at around $100 at the time. So what we had was more easing into the oil patch. More money went into the oil patch. Canadian oil stocks flew higher than the American stocks, and there was a huge overbuild in the oil patch. And now we're paying the price. And so this is a big policy mistake that Stephen Poloz and the Bank of Canada did. They're not being held properly to account for that. So yes, I think we should let the market decide, but we should also have central bankers who let the market decide and stop trying to interfere with how markets operate. I mean, let's face it, the Loonie would be on a downward trend right now because of our dependence on commodities, but we don't need a central banker, helping to devalue the currency even more. So, to get the Loonie back on its feet, we need some pro-growth policies. I'm pretty optimistic that the new government is at least moving in the right direction in a short-term basis. But over the longer term, we need to really encourage proper capital formation and investment in human and human capital and technology. And I think that some of our federal policies need a big overhaul in there. And, for example, the tax code is full of loopholes and special gifts to special interests. And we also have a scientific research tax credit regime in Canada that is really geared towards making consultants and large companies better off, and does nothing for really small companies who are just getting going. So there's a lot of work that can be done, and hopefully over the next 4 or 5 years we'll move in that right direction.
Well, what about the boss of the Bank of Canada talking about the possibility of negative interest rates? I mean,
that's the Bank of Canada's modus operandi under Stephen Poloz, and nothing would surprise me that comes out of the Bank of Canada under his leadership. And hopefully we'll go there. I don't think we'll have to go there, but depending on how world markets move, we could see the Bank of Canada try and win the race to the bottom. We'll have to see. The Fed is meeting this week, or by the time your listeners are hearing this, the Fed will have decided whether or not to raise interest rates. We'll have to see how this works out. I don't think it's a slam dunk that everything's going to work out the way the Fed has prescribed it. We can only hope it does, but hope is not much of a strategy when you're either investing or running policy. But they're gambling that the U.S. economy can stomach some rate hikes. On balance, based off of the indicators that we look at from our insider tracking, there is a slightly better than 50-50 chance that they will get it right in terms of growth being able to continue under these rate hikes. But we'll have to see. It's not a slam dunk. But if growth can continue, if growth can pick up, if China does stabilize, and no, I don't think the Bank of Canada will have any reason to go to negative interest rates. Maybe they'll invent some excuse. Maybe, I really wonder sometimes what the priorities are of the Bank of Canada. It seems they're focused on a small segment of the export sector in the economy, and really haven't given much thought to anything else. They're supposed to be managing affairs to hit their inflation targets. Their policy statements are always include that kind of language. But the fact of the matter is, there is no inflation problem in Canada. Core inflation's been running above the bank's target now for well over a year. So, this whole notion of having to go easier on monetary policy, I just don't see there's any rationale for that. And it's already gotten us into trouble under Stephen Poloz when he first took office. So let's hope he doesn't make another policy error and help tip us into another recession.
Well, another area where the government's trying to control markets, CMHC has made it a little more difficult to buy an expensive home by changing the down payment rules. But I've talked to a lot of experts, and they don't think it's going to make much difference if you can afford to buy an expensive house in the first place.
We'll have to see how that works out. I would tend to agree with that. They have also done some rules, though, on the securitization. So what that means is a lot of mortgage providers will go to the market to raise the funds to cover these mortgages, and they'll package up these mortgages and sell them into the secondary market. And there's been some changes there, making that a bit more expensive. So there could be a tightening of mortgage activity. We'll have to see. I'm skeptical of these so-called macroprudential initiatives. They may have some impact on the margin, but while the Canadian dollar continues to tank, that will just make it cheaper for foreigners to come in, who want to invest in Canada, and they will scoop up properties that the local people cannot afford. So, we're tinkering with the market, and there'll be some winners and losers, and that's always the case when you have governments getting involved. What the Canadian housing market needs to stabilize is a equilibrium interest rate that reflects the true cost of and risk of owning a home. And when we get to that point, then I think you'll see things stabilize. And unfortunately, that doesn't seem to be right around the corner, but it will happen at some point. But when that will happen is basically very hard to forecast. It could be months or years away before we get back to some sort of what I would say, an equilibrium rate that really reflects the risks of real estate, particularly in Vancouver and Toronto.
Is it really worth a person's while to own a home versus rent in today's environment?
I think everyone has to look at that individually in terms of what their requirements are, and certainly, there is a benefit to home ownership that goes beyond sort of the dollars and cents. But at some point, the costs are just so extravagant that I think that the sort of the whole stigma of just renting is people are starting to rethink that, and so I think that's really an individual decision. But and certainly in the United States, renting is becoming a lot more fashionable than it used to be. That's for sure.
Well, I know some people in Vancouver who have sold their very expensive real estate and plan to use that money to rent.
And depending on what the environment is for the rental market, that may or may not make sense. In some markets they have rent control, so if you get into a rental property that you like, you can pretty much plan what your budget's going to be for the next number of years. So the economics really depend on the market, and no real estate market in Canada is exactly the same. So you've got a broad base of listeners. So it would really depend on the local market conditions and rental regulations and rental environment as well.
We'll have more with Ted Dixon right after the break.
See singing impressionist Andre Philippe Gagnon.
And I think to myself.
In Oliver, December 29th. In Kelowna, December 30th. Buy online and save at ontourtickets.com. Unbelievable harmonies, spectacular performance, the ultimate tribute to the Everly Brothers and Simon and Garfunkel. Bird Dog and the Vintage Electric Band, Saturday, January 9th at the Alex Goulden Hall. Buy online and save at ontourtickets.com.
Welcome back. We're speaking with Ted Dixon. Ted, you've just returned home from a trip to Japan. What can you tell us about your general impressions there?
Well, we were just in Japan in December and November. My wife is Japanese, so we spend some time there as often as we can. But the interesting dynamic that's playing out in Japan right now, of course, is the coming to grips with the aging population that's been playing out for a number of years. The government has tried a number of tricks, number of initiatives to counter the headwinds of an aging population on economic growth. Certainly, in the last number of years under Abe, the country's become more focused on trying to regain its competitiveness and its growth footing. We saw a massive depreciation of the Japanese yen from what I think you could argue were overbought territories that it was in a couple of years ago. The yen was really kind of on a speculative one-way bet higher that probably was beyond any sort of market justification based on fundamentals. Yes, the speculators would keep pushing it, but at some point it just got too extreme. Now, the yen appears to have kind of hit its at least near-term weak spot, and it's been strengthening again, particularly against the Canadian dollar. We found that out on the way home, but fortunately the moves have been fairly smooth in terms of the Japanese currency over the past few months for Japanese consumers and businesses. So they're going through a transition. I think we've kind of seen for now the peak in yen weakness, and the government is now trying to deal with some tax measures to boost competitiveness. That looks like they're turning away from the sort of currency and now getting to grips with tax rates, and also they're big champions of the TPP. I was encouraged when I was in Japan that I heard right after the election of Justin Trudeau, one of the first tweets that came out was that he had talked to Shinzo Abe, and they were both going to work together on the TPP deal. So I'm encouraged that they're both thinking about trade, and that of course that the Japan-Canada relations seem to be getting onto a good start under the new government. So the Japanese government is definitely sort of trying to shift gears here. I think that we've probably seen a peak in experimental monetary policy out of Japan. Sure, things could take another leg down, but things seem to have stabilized, at least on the policy front. Now, in terms of at a societal level, I think that they are going through some tough adjustments. But the Japanese are a very resilient culture, and they seem to be weathering this sort of transition pretty well compared to how a lot of countries might weather it. So generally, Japan seems to be stabilizing and making the best out of a very difficult situation, and they have come a long way under Shinzo Abe, I would say, in sort of regaining some momentum, and they were at real risk of being eclipsed by China in the region, and they seem to have regained their footing a bit there. So all in all, Japan seems to be coming back a bit, but we'll have to see how strongly they're able to regain the momentum here. But things seem to be moving in the right direction for them.
What would it take to have the Japanese to make more babies? Because that's one of their biggest problems. I just heard a village had a huge celebration because they had their first baby in 40 years.
Well, some of their villages are quite small. You think of Japan as Tokyo and Osaka, but when you get into the countryside, it's quite charming, and there are a lot of small little towns in Japan, and they're a lot cheaper to go and visit than it is to sort of trek around Tokyo. But in Japan, they really do put a premium, I think, on kids, and you see it in the way the department stores are organized. For example, they're much more kid friendly than I would say the typical department store or retail outlet here in Canada. In that, I guess maybe in Canada we take population growth as for granted, where in Japan it's a little more scarce, so they put a higher value on it. I don't want to make too much of that, but certainly they do tend to encourage or support, I would say, trying to encourage families to grow, and there is a definite recognition that I think they do want to encourage more kids. Now, whether in terms of fiscal policy, right, in terms of like tax measures, they did try something like that under the previous government, but as far as I know, it hasn't been expanded under the Liberal Democrat under Shinzo Abe. They've kind of been focusing on actually trying to get women back into the workforce. So there's a bit of a conflict, I think, there between sort of, wanting to have more kids and also wanting to get women back into the workforce. There's those are two sort of competing economic objectives in some cases. So they've got their work cut out for them there, but they do have a lot of infrastructure, childcare, early kindergarten, so it's not that difficult for those families that do want to have two people working. But of course, there's still challenges as here in Canada, if you're going to have two people in the workforce and you've got kids, there's challenges there as well. But certainly, I would say that they are trying to do subtle encouragements to increase the number of kids, but I think they still have a ways to go on that.
We talked off air as well about a prediction that the shopping mall is on its last legs because of online shopping and the high cost of taxes and maintaining these brick and mortar services. And the strip mall asked what about the future of that? And apparently most strip malls are supported by a banking branch of some kind. And the banks, of course, are trying to cut their costs. They may be closing the branches, but you had a bit of a feeling about that.
Well, I think in general, in the online world, there is a limit to your marketing reach. In that, yes, you can use social media, and you can use advertising to reach out to people. But there are still opportunities for the personal touch and reaching out to people one-on-one. So I would be surprised if the bank branch totally disappears. Sure, I think you'll see some rationalization, but it may go through an evolution where it becomes even more client focused and less routine transaction focused. So I think you'll see an evolution, but whether we need as many, whether we need a bank branch, every 3 or 4 or 5 blocks, or whether it should be every 3 or 4 or 5 kilometers away. I mean, the banks will each have their individual strategies on that, and you could see different approaches on different branches, different banks. So it'll be interesting to watch it, but certainly I'm sure the Canadian U.S. REIT will be industrial and commercial REITs will be keeping an eye on that, because as you mentioned, it's just another potential headwind for that group, and they'll have to find ways to encourage that space to be filled with other organizations that want to reach out and touch people, individually, as opposed to just staying online. So, who knows, Jim? Maybe I know this might seem a bit radical, but who knows? Maybe in 10 years, we'll be having Amazon stores and strip malls. We just don't know. And we'll just have to see how this evolves. And Microsoft is building out its stores, and who would have thought about that? Who would have thought we would see that 10 years ago, where Microsoft would be taking out high-end retail space in downtown Vancouver?
Well, Amazon has actually built a store in Seattle. Who thought that they'd go retail?
Well, that's right. So at some point, do you really want Canada Post, holding on to your parcel? I mean, one of the most frustrating things, I think, for a Canadian online shopper is so much of these online merchants use Canada Post, and all I can talk about is from my experience. Canada Post no longer seems to be in the business of actually delivering something to your door. I mean, you're supposed to go to the post office for just about everything, and so that's fine, but isn't there if you're sending people to Canada Post, aren't you sort of giving them a marketing opportunity, which I'm sure they're not capitalizing on because they're Canada Post. But in general, there may be an opening for private enterprise. I mean, Canada Post has this monopoly on home door-to-door service, but they don't do door-to-door service anymore. So what's the point of having their monopoly when they over something they no longer want to do? So, I mean, I guess some people still have I'll call it the privilege, because that's what it's turning out to be, is having door-to-door home delivery, but more and more that's becoming increasingly rare. So, why not have retail outlets where, if you're an online merchant, where people come in to your store to pick up goods that they've ordered online? We'll have to see how that evolves. So, whether strip malls have a role to play in that distribution network down the road, we'll have to see. But certainly, for those listeners who are invested in REITs, that is a very good question to be asking your investor relations people in that REIT. What kind of trends they see unfolding in the retail space down the road. If you're invested in a REIT that's got a lot of retail exposure.
Or the new trend, your investor advisor robot.
Right. So we'll have to see how that unfolds. This concept of automatic investment advice is not new. It's getting, seems to be getting another kickstart here with the latest run in the NASDAQ, and but the idea where you could optimize your investments and transactions, this is not new, and have an algorithm do it for you, but it's getting a second wind here. So we'll have to see how far it goes and how many people are really willing to turn everything over to a algorithm on a computer screen. I mean, there'll be a number of people who are willing to do that. I'm sure a number of your listeners right now have already experimented with that and maybe using some kind of services, but I would guess that the vast majority have not, and that a good sizable chunk of your listener audience will not for quite some time go down that road.
Ted, thanks a lot for chatting with us.
Anytime, Jim. Pleasure to be back.
My guest has been Ted Dixon, CEO and co-founder of InkResearch.ca. You're listening to HowStreet.com Radio. Find us on Twitter at Talk Digital Net. Our popular YouTube channel is Talk Digital Network. Comments about the show can be emailed to info@HowStreet.com. I'm Jim Goddard.
comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.